Okay. Good afternoon, good morning, good evening, whenever you're joining us from, and welcome to our Masterclass series for the year 2025, where we are going to be discussing typical business challenges that disturb our African entrepreneurs and how we can navigate around it. Like we said, is going to be a stakeholder engagement because we want to serve two purposes. We want people that are actually having this challenge to be able to gain from the discussions, and people that are preferring solutions for this challenge to also have a wider view of what they are doing, right? So at the end of the day, we can all come up with a solution is that can be used, right? So, but before we begin, like is our culture, we'll commit this discussion onto the hands of the Lord. So please join me for a short prayer. Our Father and our God, we thank you, Ancient of Days, we worship you. I am that I am, we give you glory. We ascribe all glory, all honor, all power, all majesty to you now and forever in Jesus. We ask, Heavenly Father, that you take control of this discussion in the name of Jesus. We ask, Lord, that you speak through our guest speaker in the name of Jesus. And let there be light, let there be insight, oh Lord. In Jesus' name we have prayed. Amen and amen. Once again, this class was sponsored by Ariel for Africa, and we want to say a very, very, very big thank you for partnering with us to do this masterclass with us. I'm quickly just going to quickly introduce Ariel for Africa so that you can check them out. They are a brand with a vision to help nurture African entrepreneurs. They have been our partner for years, right? And we just want to say a very, 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 very big thank you for the great works that they are doing in between the classes. I'm still going to be chipping in what they do. But please ensure you also check them out. Their website is arielforafrica.com. And their MD, founder, and CEO is the one that is going to be on this discussion today. That's Mrs. Edith Wangare. And I'm going to quickly read her bio so that you can get to know, because we bring the best of the best for you every time. So her journey into the dynamic world of investment banking is a story of vision, resilience, and transformative impact. As a seasoned banker and serial entrepreneur, Ms. Edith has dedicated her career to shaping financial solutions that drive economic growth, foster entrepreneurship, and promote sustainable development across Africa. At the helm of Ariel Africa Advisory, as its CEO and Managing Director, she has turned challenges into opportunities. You see that she has turned challenges into opportunities for businesses across the continent. Her leadership has guided the firm to specialize in capital raising, investment structuring, feasibility studies, and strategic financial advisory, particularly for Tier 2 corporates navigating Africa's unique business environment. From structuring funding solutions for manufacturing firms to facilitating capital raises for infrastructure projects, Edith's ability to craft tailored financial strategies has unlocked growth potential for businesses spanning industries and geographies. Our expertise shines in the structuring of complex financial instruments, private bond placement in the UK, pseudo bonds, senior debt, and equity financing designed to meet the demands of her clients. One of her most notable achievements is her work in the healthcare financing, where she has played an instrumental role in raising over 50 million for hospital expansion projects in West Africa. I'll tell you this for free that this is just an abridged version of her bio. If you see the work that she has done, and I will just use this to say that because at the end of the day, we're trying to have a digest, right, from this. So we are going to expand her bio there. Then you will see the full length of the work she's doing in providing finance for African entrepreneurs. So we're just going to say a very, 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 very big thank you for doing this with us, Mom. And then we can quickly just dive in the questions. Like we said, it's a stakeholder engagement. And so we want to ask the questions and want to hit them on the head. So first, let's just deal with the elephants in the room. Because if you're talking to African entrepreneurs, the first thing they will tell you that, oh, I cannot do what I'm doing because there is no finance. So the first question is finance an absolute limitation when it comes to um, when it comes to doing your business? And then if it's not, how can African entrepreneurs tackle this? Thank you so much, ma'am.
I love the intro and the bio. You know, sometimes when I listen to people introduce me, I'm like, oh, who's that? Only to realize that they're talking about me. I would say no, it's not a barrier to starting a business. I think that a business, depending on the sector that you're in, can be bootstrapped to success. Bootstrapping is a form of financing. So when you read about financing, there's debt options, there's equity options. So bootstrapping is another pipeline, okay, on how to finance your business, which means you start with what you have, okay? And also just tying this to a faith perspective, right? Um, when Moses is complaining about, or rather is looking at the Red Sea and is wondering how we're going to cross, and he asks God a question, like what now? And God asks him a question in response, but what is in your hand? So I think also for us entrepreneurs, we need to ask ourselves what is in our hands, and in terms of, okay, now we've said bootstrapping is an option, then the question is how, or rather, how do you begin to bootstrap? It essentially means whatever revenue the business makes, you put back into the business. So you don't take money out of the business to pay yourself or as dividends or to feel nice or, to buy that dress or to pay your rent. No, it's focused on business expenses. This also means for those of you who have a side hustle or another gig that you do, or you have a job on the side, you take the money from that and you yourself, you invest into the business bit by bit. So not very aggressively, but almost in a bootstrapping manner to cover certain costs. But you're trying to get your business to a point where the revenues can pay for the business to continue running. That is called bootstrapping. However, it does get to a point, okay, where your business cannot grow or scale without capital. And that particularly affects fast growing, high demand businesses. So if you have a large pool of clientele and you need to deliver for them pre receipt of revenue, then you're going to be in a bit of a bind and you're going to need capital. Or if you're sitting on the other side where you are delivering a product and your product needs capital to produce, to manufacture, to buy from somewhere and maybe upsell it or like make it better to then sell it with value add. At that point, you may also need capital. So it really just depends on the space that you're in. Also, if you're very capital intensive, so equipment, land, similar, then you will need capital. So it really, there are different ways of playing with it. You can bootstrap, but it doesn't always apply.
Thank you so much. I love how you explained it. It
Mm.
is not a limitation, but they'll get to a point in your business where you need finance to scale. And
Yeah.
before you get to that point, you should have garnered the know-hows on how to get finance. So before you just come up and say, oh, I cannot start that idea because I don't have finance, it is wrong. It is a challenge, yes, but it's not something that is going to limit that idea. Because sometimes from experience, God might not, because we are all faith people here.
Mhm.
So God might not give you that amount that you need because He's still trying to see how best you can manage it. So show him you can do manage little and trust me, that money is going to come. Thank you so much, ma'am. So our next question is, how adequate are financial inclusion initiatives and financial literacy campaigns in your region now? Because we know you are handling the Western and Southern region. So how adequate are they and how accessible are they? And if you can just mention a few.
Hmm. I would say, so when it comes to financial literacy, you'll always have players like your foundation guys, so your MasterCard or similar. And those ones, they play a role across sub-Saharan Africa. You'll have mostly ITC, like a lot of the bigger foundations are the ones that are focused on that. In terms of like boutique firms, you'll see a few players, and likely owned by an ex-banker or similar. And then sometimes you'll also see banks or stock exchanges trying to do things, or universities trying to have a program. A very, very popular example that actually comes to my mind from East Africa is Centonomy. Um, and they're very focused on that space, right? So when it comes to financial literacy, I think the most important thing to understand is financial literacy for yourself and for your business are two different things. And people need to understand that, right? You can understand personal finance and fail to understand business finance. They are two completely separate concepts, and they have two different, almost like journeys to get there, right? So, for example, personal finance, all of us can learn it and apply it. Business finance, not every entrepreneur can master this, okay? And it's okay if you cannot. This is why you outsource. This is why you bring in professionals. This is why you work with firms like ourselves. This is why you bring in other people that understand this space. Because finance also is not accounting. Again, two different things, right? Even personal accounting is not personal finance. And business accounting is not business finance. Again, people really get confused on these things. I don't think they're sufficient across Africa. I think across what I've seen in Africa, name the country in sub-Saharan Africa, we don't have enough players in the financial literacy space. And the reason being, financial literacy is actually wide, right? And people don't know this. There's financial literacy from the standpoint of managing your everyday expenses and everyday income. There's the element of investing and having a portfolio. And that can be in the stock exchange. So treasury bills, treasury bonds, stock and what have you. Then there's the point of you're managing your business's finances. Then there's the point of you're now raising finance for your business. Then there's the element of now you've grown, okay, and now your wealth needs to be managed. So now you talk about things like retirement, succession, insurance. Like it's so wide when we talk about financial literacy. And the truth is, a lot of Africans are very illiterate. And then there are a lot who think that they're literate, but really they're partially financially literate. So they don't understand the full scope. And I think that's where you need to have an understanding of the different players, right? So you have your financial advisors, you have your wealth managers, you have your financial planners, you have your personal finance experts, then you have your financial analysts. So there, even just inside that, there are so many roles. It's so complex, actually. So I don't think there are enough players because, again, you can't tie them all together. They are very separate.
Wow. Even I myself, I'm learning a lot today. You see, this is why it's good to interact with people. Because most times when we talk about business finance, the very first thing that comes to your head is, oh, or access to finances. I just want to raise money for my business. And now I'm learning today that there are different aspects of it. Is it that you want to go into investments for your business? Is it that you want just someone to analyze? Is it that you just want someone to do this? And like she rightly said, most Africans are partial illiterates or like literates when it comes to finance. And no, this is not coming like a derogatory way. It's just that most of us do not really understand business finance. Why everybody needs to learn personal finance, not everybody can, like she rightly said, really understand business. It's a lot, and this is why we have experts. And I'm even going to state here that there are some of the courses on RL for Africa that would teach you these things. And I was going through their website and I saw one course again on bootstrapping, right?
Yeah.
So there are courses there. Please, if you really want to understand business finance, please go and hold that company. Hold them and let them help you across Africa. Yes. So our next question is, what policies or initiatives exist in the Western and Southern region to enable startups and SMEs access financial facilities affordably. And the key word there is affordably, because it's quite expensive to access this thing. So what are you aware of that can make them access it affordably?
So it's right now, if you're a startup or an SME in, I don't know, maybe Nigeria, Ghana, Senegal, or even if we come down to SADC, I don't know, Zambia, Mozambique, what have you, you will likely, when you think about I need money, you will think of a bank. Okay, so you wake up and you go to your bank, and your bank, for instance, in Ghana, will tell you, if you're an SME that's been running, our best rate for you is 34%, because they'll say 29 plus your risk. So maybe 34%. If you're a startup, higher, you know? So it's gonna be expensive, okay? Now, I know it's because we think bank, okay? And we think loan. Like, I'm going to my bank and I'm going to get a loan. We, first of all, as businesses, need to ask ourselves, what is the purpose of the finance that I'm going to go and ask for? If you're asking for financing for trade, okay, then there's a particular area called trade finance. And for this, there are players across Africa that cut across. So your Tradable is one, your I know AfriExim, AFDB sometimes also do that. There are different players that specialize, Axis Bank, that specialize in trade-based instruments. So when you're doing trade finance, again, there's a way you can approach your bank, get a letter of credit. Off of that letter of credit, get a 1 or 2 year facility from a trade financier or a trade-based lender. So you've not gotten the money from your bank, you've gotten it from the trade-based lender. So, and all of these policies and structures exist in West Africa, in South Africa, even in East. East is a very mature financial market, especially Kenya compared to some of these other countries. But these instruments exist. The second bit, there are policies now that allow for existence of what we call financial advisors, which is what we are. And then there's also existence of your fund manager, okay? And your fund managers are the ones that now a lot of us call venture capital, a lot of us call angel investor, etc. So there is room and space for us as business owners to access more modern or US based, okay, forms of investment. So for instance, you will find a fund manager or venture capital firm setting up in different markets, okay, across West and South Africa, even East, and they will have a license that allows them to lend to you. Now, the nature of the lending will likely be equity, and for that, that's an entirely different conversation on what that looks like and what the pros and the cons are. And then, or debt-like structures, that's more your private equity guys. They will also have a different license that applies to them. Then the final policy or bit is in Africa, or rather across West and South Africa, there are corporate bond structures available, but an understanding on how to list a corporate bond is what a lot of businesses don't have. Now, I only advise for corporate bonds if you're tier 2 corporate, meaning you're not an MTN, okay, but you're maybe a little bit lower, okay, you're maybe in the telco space, or maybe you're a hospital or a upcoming hotel, a smaller boutique one. You can do a corporate bond, okay, which then allows you to pay back your bondholders the same way governments do, twice a year. And at the end of the term, you pay a lump sum. So it allows you to put the money to work. It's not like a normal loan where you're repaying principal and interest. Here, you just repay a coupon. But a lot of businesses don't know how to price their bond, okay? How to book run, okay? Because book running is how you bring in the money from different investors that put money into your bond, and then how to handle the repayment, okay, of those coupons, which is where now investment banking comes into play. The final thing I will say is policy-wise, countries have different laws around liquidation, of ownership, around bankruptcy, okay, because all this comes in with raising money, around listing. So IPO, for instance, if you're not Flutterwave, it's not going to happen for you. So African markets were very young, were very, very young. In the US, startups like Bumble can list, okay, and get an insane amount of money. Here, you have to be like around for years and years and years in order for it to make sense for you to do an IPO. But I am hoping that markets will mature. So for instance, Nigeria, your stock market is really good and there's that room for maturity. South Africa, the Johannesburg Exchange, very mature, room for more maturity. Rwanda is doing very well. But you still have other players, you know, where it's still, there's a bit of a mismatch in terms of the maturity, and we all have a very long way to go. So there's a lot of infrastructure. I think it's just the maturity of the infrastructure that's not there.
Thank you so much, ma'am. Like I said, I'm learning a lot. Now, like she said, the very first thing is, oh, I want to raise money. Oh, can I look for a loan? Can I look for a grant? Can I look for this? Like, you need to sit with a financial person to understand what is best for your business at that time and what is the most affordable option for you at that time. Two things: what is best for you, what is most affordable for you, what can your business even attract to you, right? Because like she said, now if you can outrightly just go for an IPO if you check your books, they check your standing and everything, and you don't know, and you're just like, oh, let me just go get a loan or let me just go get a grant. Like you said, like she said, there is partial literacy with this finance of a thing, and so you need to not be thinking I can do this on my own. Let me just go get let me move away from consultancy and just go and figure it out on my own. It will take time for you, right? So please endeavor to interact with professionals when you even want to access finance. It's very, very important so that you don't put your business in a debt that was not really necessarily needed at the end of the day, right? The next question I wanted to even ask was about loans. So we're just going to skip all that, right? Because you already explained quite extensively on that. So our next question is, how does the regulatory environment in the southern and western region impact business financing for entrepreneurs seeking to penetrate new markets? So for example, if I'm in the West, like you said, sometimes that when you want to start the business is not a limitation, but when you want to scale, then you might need finance. So let's say I've started in the West already, and I want to move to maybe the North or so how is the regulate? Okay, I want to move to the South now. How is the regulatory environment? Because at this time I want to penetrate a new market. So how is it like at this time?
That's actually an important question. So businesses need to set up what's called special purpose vehicles. And the point of this is, okay, if I use myself as an example, if let's say Ariel is registered in Nigeria, okay? If we're registered in Nigeria and I have received a loan or I have capital to be able to function in Nigeria, I've built up my books, I have good track record, etc. And now I want to expand and maybe let's say set up in, I don't know, Angola, okay? Then now the question is going to be, do I then go back to the same lenders that had given me Naira loans to go and then operate in another country? No, because now what you'll have done, you'll have exposed yourself to currency risk twofold. Because now you'll have to change the Naira to dollars to then go and change to whichever local currency, okay? Same thing. Let's say maybe Zimbabwe, right? Because they have very weak currency. I know they're now trying to peg it against gold, but before that is properly running. If I now then take my naira to dollars, then go to the Zimbabwean dollar, then now I've exposed myself to loss twice. Okay, and you don't ever want to do that. The second thing is that I would have a loan pegged, okay, on my risk and on the economic standpoint of Nigeria, but I'll be spending the money in Zimbabwe. You also don't want to do that. So what you do, you set up a holding co in a tax safe, tax haven, high standing, okay, when it comes to financial risk country. So that's Mauritius, for instance, if we're looking at Africa. So I set up a holding company in Mauritius. That holding company in Mauritius then receives capital, be it a loan or equity or whatever have you, in Mauritius. From Mauritius, I then issue what's called a shareholder loan to my new subsidiary in Zimbabwe or in Angola. So the capital has come in the form of equity. Because that's another thing when it comes to maneuvering countries. When money is coming from outside, okay, the country looks at you like, where is it coming from? Who are you? You're not from here. You've set up a company here. So there's also a conversation around, where is your money coming from? In what nature is it coming? In what currency? So to let it come in dollars. So you say raise in Mauritius in dollars. The dollars come, say, to Zimbabwe, and then you apply and you do whatever business you need to do. But do it as a shareholder loan. Why do I say this? Because then Zimbabwe pays Mauritius entity back as it would pay a bank or any other lender. So it pays back with interest, and that interest then sits in Mauritius as an income for your holding company. The reason why you do this is because then you're not hit by taxes. So if the money is coming from Mauritius and it lands in Zimbabwe, they'll tax you tax on tax on tax on tax on tax. But if it comes as a loan, then it's not the same. It's a local company receiving an international loan from a very safe country where it has trade agreements. So that's another layer, okay? From Nigeria, say to Zimbabwe, they don't have trade agreements. So if you're doing business and you're sending money and it's back and forth, you'll have what's called double taxation. So you pay for whatever income in Zimbabwe. When it lands in Nigeria, you pay again your tax. So all of this is like exposure on top of currency, on top of, so whenever you're trying to select how to set it up, I'm not saying only go to countries where your country has a trade agreement. So for instance, Kenya has very good trade agreements with Ghana, which is why for me doing business in Ghana is going to be very easy. In the East Africa community, very easy. With South Africa, very easy. If now I wake up and I want to go do Cote d'Ivoire or I want to do Senegal, I have to pause a bit because it's going to be a lot of stories. So, but the best way to get around it is to have a holding company where already there's a trade agreement, okay? And a lot of times Mauritius is a very good Africa option because that country tends to have a lot of agreements with a lot of other African countries. So when you have that as your holding company, then you can easily do business regardless of whether your country has an agreement with the country you're going to.
Again, we are learning something new. You see why it's necessary that we have this stakeholder engagement and not do the necessarily. You want to assess and finance A, B, C, D. You want, because these are conversations we need to have, right? Like she's rightly explained, you'll just put your business in unnecessary debt if you do not seek the right professionals. You need to sit with somebody. I have done successfully well in this region. My customers are now in this region. It's not the next thing is I want to just go set up a company there. I want to just do this. No, you need to sit with a business finance person to understand the underlying mathematics. Let me use that word. The lining calculations on how to do it so that at the end of the day, you are not just with them. Because trust me, in Africa, we are coming to a place where our leaders are going to rely heavily on tax as one of the ways the economy is going to make money. So you don't want to be on the wrong side of things. Most business may, and I'm trying to be very objective or with the words I use, may have gotten away with it, but you might just try it and you will be the scapegoat. So it's best you sit with financial people and understand the liabilities, what is going to happen, the what ifs, what nots, and then make a strategic decision. Don't blindly make decisions like this. Thank you so much, Mom. I hope you enjoyed this conversation as I am. I'm learning a lot. I'm learning a lot. So our next question is, what financial instruments have been placed by governments and private institutions to improve finance for business owners, and what are the major limitations to these things? Because we know that they are trying their best. It would be unfair to say that these two stakeholders have not been trying their best. But like we rightly learned, it's a challenge. It's something that is going to be progressive. So what are the limitations to this? If you can even mention some of the things that you've seen that they have done, and then what are the limitations to these initiatives? Is again, this would help people that are trying to enter this market. Like you said, we need more players as to providing access to finance. So it can also help them with their unique selling point. Let me use that word. Yes,
That's
ma'am.
perfect. I like that question. So I'd say, when we're looking at East African countries and Southern African countries, we tend to have more instruments, from what I've seen, than a lot of West African countries. And the reason for that is the openness of the market, or rather perceived, I don't know if it's openness or perceived safety, right? So where you'll see was especially Anglophone countries and bigger ones, bigger economies. So your Kenya, your South Africa, your Zambia, your on the west side, maybe Nigeria. Ghana is gray listed still, so they don't have as many options. But a lot of the bigger ones, Egypt, right, they'll have a lot more instruments, okay, relative to other countries. That's number one. And this is mostly because players from outside, like JP Morgan, HSBC, they'll have headquarters, okay, in those countries. So they will then begin to introduce these different instruments. A lot of times, the exposure to instruments is on the basis of how open you are, which is why when you look at Ethiopia, which again is a country I've done a lot of business in, Ethiopia is a closed market. They don't even have international banks. So as a result, they don't have instruments. Only now is when they're getting a stock market. So just because of that implication of openness, okay, or how safe you're perceived to be or exposed you're perceived to be, then you'll have more instruments. So instruments here that I have seen that have been introduced both on the private side, but also by governments, is senior loans, right, or senior debt instruments. The limitation there is you're going to need collateral. And not every business is going to have that. The second instrument I've seen is the letter of credit or bank guarantees. Those are good because when you have what's called a DFI, that's a development finance institution that is funding that business, you have to provide a guarantee of sorts. Especially if you're going to receive debt, you need to provide a guarantee of sorts. The other instrument that I think is good but has been corrupted a lot by fraudsters is the SBLC. That's your standby letter of credit. And SBLCs are a lot of times, they even come as I don't want to get too technical, but it's a form of, you use it for financial engineering. So you get like a Swift code, right, with that SBLC. Now, with that, you have a lot of people that are now taking advantage of businesses with such instruments. But you can essentially pick, say, I'd go to a bank, get an SBLC for, I don't know, $1 million, okay? And then I go and I monetize it. Monetizing it meaning I can now get cash, because an SBLC is just an instrument. I can now get cash against it, but the cash will be discounted. So I'll now get 80% of that money. And then I can put that into my business. But when I'm repaying, I'll repay 100%. So again, that's another instrument that people can also apply, especially when you need cash very quickly. And also when you're looking to do more of the financial engineering route. But again, there are a lot of fake players in that, I always say this, in that SBLC market. So you need to know who you're going to. The other instrument that I've seen also being applied is when we inside equity, there are pure equity instruments. So meaning somebody takes shares, ordinary shares in your business. This will likely be an angel investor or a venture capital firm or a fund manager or similar. Private equity, a lot of times when you talk about their equity instruments, will be preferred equity or mezzanine, which again, very complex to a person who doesn't understand, or rather who hasn't been working with these instruments. But those two, they are equity, but they act like debt. Meaning you'll pay a premium, maybe 3%, which businesses don't know, very affordable, 3%. And off of that 3%, at the end of, say, 6 or 7 years, you pay a bullet payment of the full amount that you had borrowed. So instead of paying 34%, or depending on the country you're in, or 19%, Southern Africa has better rates, or 19% or similar, then you end up paying 3% premium. But with that, you have to make sure that you're putting the money to work. Another instrument is also debt factoring. And this brings me to the conversation around secondaries market. So there are ways that businesses can play in the secondaries market, meaning you remove a current lender who's more expensive for a more affordable lender. And us as Ariel, we've done this for businesses, so maybe let's say they had a previous lender that was at 40%, and we bring them a new lender to buy out the previous lender at a lower rate. That's now your secondaries market. Or you had an equity investor who had eaten 50%, then we bring in one that will eat 20%, and then give back the other shares to the company, but it's because your valuation has gone up. There are different ways to play with this. On the debt factoring side, you can actually sell where people owe you money. So your receivables, or the people that need to pay you, are also a form of collateral. And there are ways that, depending on how your business is structured, you can play with this, okay? Then there's asset financing, which is you're receiving capital for particular assets. In line with that, just remember, whatever financier likely will ask for 160%. So meaning if I want $10 million, I will provide an asset most of the time worth $16 million, which again, people don't know. So that it's also expensive, right? The last thing, I don't like to talk about grants. I think that's when Tass will find another speaker. Me, I don't play in grant markets because I don't believe in free money. I believe that Africans, we must pay, okay, for our money, either in premiums or in interest or similar. I should also mention there are now more structures around Islamic finance. And I'm not so much of an expert, but I understand it enough to be able to talk about it. When it comes to sukuk bonds or commercial paper, those are available because a lot of Muslims, they don't take money and pay interest. They say it is not halal, so it is not right for them to pay in that way. So you now have structures where it looks like a bond, So they pay a coupon. So the word interest is not there, but they still pay a coupon. Or they have more profit share type lending instruments, which I think I've always admired, right? How Islamic finance works, because I think actually, if anything, it aligns the most with the Bible, right? Those Islamic finance instruments. So those are also around the mudaraba and similar. Again, big words, but I think that's like a whole different topic, right? Which I think somebody needs to have Islamic finance for Christian businesses, because I think it would work great. And it's more affordable, also, if I'm honest. So, but we're seeing more of these coming up. So, for instance, Kenya did a Sukuk bond, I think it was last year for $300 million. A business raised off of that very affordably. I know in the Lagos Exchange, it's very easy to do sukuks as well, and to have commercial papers and similar, especially for those businesses in the hostel or student accommodation space. They tend to use those instruments a lot. Yeah.
Wow. There is a lot. Like you rightly said, business finance is wild, right? It's a very wide topic. Every solution has its limitation.
Yeah.
That's just the truth because it's from that limitation that we have innovative solutions and we keep growing. So while instead of just saying one party is not trying or one party is not trying, try and understand, right? And understand with a mindset as not to just criticize outrightly. Try and understand first, and then you'll be able to. But like you said, this class is a class you need to go over and over and over and over and over again. And while you are doing it, I would just advise you as you are coming across of words that is like new to you, just open the Arrow for Africa website beside you. There are some courses that are there that will help you understand what she's saying. And we are saying it because she's been our partner for years. So we know what we are saying. Just open it and like, okay, this particular, I'm interested. You know, there are some words that will just look at you. I'm interested. It's not here we could even if you are going through it and you're saying okay it's not there you could always reach out you could always ask on your behalf that okay are you planning to have this like we said that this is the beauty of the community are you planning to teach this are you planning to have this course I was like oh yes oh because oh I've been planning to do it okay now we would hurry it up so
Yeah.
again advisable just open their website and be checking it and then you need more just let us know like we always say just tell us what you need we'll get it for you we have partners that can get it for you. Thank you so much. So our next question is, how do political instability and economic vocality affect the effectiveness of financial solutions?
Um, I'll use an example actually. I'll use Uganda as one example. So, if you don't know, the Ugandan president, Yoweri Museveni, he made um, LGBTQ, okay, illegal. So if you are LGBTQ in Uganda, you can go to jail. Okay, it's illegal. As a result, all the players, I won't even mention their names, because then they might come look for me. They now are not as interested in lending to Uganda as a result. So if you are then a Ugandan company, that is an impact on you if you are receiving finance from a lot of those players. I won't say who they are, but you can go and research for yourself. Me, I'm just putting it out there. These are things now that get me into trouble. The second bit is Burkina Faso has a very forward-thinking president who is really breaking the mold for Africa. I think if anything, he's teaching our presidents how to do their jobs. Interesting, since he's 36 years old, military guy. He has now repaid all of the debt of the country from what was spent in corruption. Again, him, very forward thinker. But a lot of times when you are drastic, okay, then the West receives it how they want to receive it. I wouldn't even say how they've received it. And that then has an implication. Okay, next layer You now have countries that have over borrowed, like heavily, heavily borrowed. So Ghana, for instance, came from their NPP to NDC party last year. Okay, so they now have a new president. But the previous regime had borrowed insane amount. I think more than what the country could stomach. Kenya, we are now heading in that direction because also we have over borrowed for what we should be. And you see, especially when countries borrow and it doesn't go where it's supposed to go. I won't tell you where it's gone. I don't know where it goes. If it doesn't go where it's supposed to go, then there's a ripple effect. So what ends up happening, your country is then Moody's and Fitch and name it, they give credit rating for countries. So your country is now, the rating drops, okay? So let's say maybe you're now a CAA country or similar, you're C-rated. That then means for you as a business, okay, this really affects you because if you are now borrowing, especially on an Africa platform, so your AFDB or similar, or internationally receiving funds, IFC, DFC, name it, similar, your rate is going to be different. Or sometimes you're as a country, you're excluded. So for instance, Ghana, because of their macroeconomic bits, I've spoken to like 6 DFIs that do not lend to Ghanaian companies. So you could have a great project, a great business. You could be thriving. But if they don't lend to Ghana, they don't lend to Ghana. So for you, where you're sitting, you will now reap that political, whatever it is, right? So that's why, again, we always say as African countries, as African entrepreneurs, we have very, very unique experiences as a result of the governments that we are under. And that is why it's very important for us to have the right people in power and to make sure they're doing the right thing. Because that credit rating alone can either mean you don't get money or the money you get is expensive, or you now have to start doing what I mentioned, setting up SPVs in other jurisdictions and diversifying your country. So, okay, if you're in Ghana and now you can't access capital, what does that mean? Does that mean you shut down your business? No. Then it means, okay, you set up in Mauritius. From Mauritius, you then begin to diversify into other African markets. The company in Mauritius is the one that now goes and raises capital. The other factor, political instability. Nigeria is the best for this one when it comes to currency. Who? Because they're exposed. Now, everyone who's trying to invest, they're wondering, okay, if I give money, how will the business repay if they're a local business? Okay, local meaning, let's say maybe you manufacture water, clothes, whatever, or you're selling or whatever, or you're in agriculture, but you sell locally. But if you're to get a dollar loan, how are you going to repay if the naira is jumping 1900? What's next thing 3000 against the dollar? How are you going to repay? But with that, there are now conversations around currency insurance. But the best hedge is export. So if you're exporting your product, even if now for actually creating it, you have naira expenses have now gone up, that's fine. But now when it comes to export, you get in dollar revenue, so you can repay a dollar investment or a dollar facility. This applies even if it's equity, because when you receive the equity from an investor or venture capitalist or whatever, it'll be in dollars, euros, pounds, okay? If you're sitting in Nigeria and the naira is going up, 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 then you need to bring in someone who's an expert on hedging for currencies to now see what can I do. Okay, so that now by the time you're approaching somebody to ask for investment, you're able to say, this is how I'm going to protect this risk for my country. Because your politicians are the ones actually, a lot of the decisions they make are the ones that drive up that currency element. All these things is as a result of decisions.
Wow. Like, because we brought out a survey and we asked people to fill it. And then when we asked them about what was their take on stakeholder engagement, most of them were like, no, It's not important. And you see now, she said these things that you're saying is not important is what is going to affect your financing. And this is why we're having stakeholder engagement. It's very, very important you are current. You know what is happening. And again, it's like I'm just saying this over and over again. Speak to a finance person before you embark on this thing. It's very, 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 very important. I'm just quickly going to brush over our next question. In what ways has cultural factors and financial literacy limited the success of financial initiatives? I know you've spoken a lot about financial literacy, but how about the cultural factors? And I think the example you gave about a country not lending to another country, and I'm like, oh wow, they do that. I'm like, okay, that's like a cultural factor. So, but again, if you are the expert, so let me just allow you to answer the question. But to me, that was shocking. Like, okay, so a particular culture doesn't want to lend to another culture, and people are not really on because these things. If you don't really know these things, and then you are just banking on that. When I get there, and you're like, oh, this happens even among ourselves. This happens. You see, this is why there is this people coming out now to say one Africa, one voice, one this because of situations like this. But is there any other thing you would want to say on the cultural difference?
I would say, so I saw a quote from one of my investor friends, and she wrote, I think she summarized it in such a powerful way. She said, if you're a business in America or in Europe, you raise capital on your idea. If you're a business in Africa, you raise capital on your traction. So for us, nobody cares about your idea. You could have the best idea. Nobody cares. Go and get traction. So for us, it's not about how well you pitch. It's not about how well your app is functioning or what you built or how amazing it is or how much people will love it. The white people don't care. What they want to see, because Africans were already we're at the bottom of the pyramid, okay? We're at the bottom of the barrel. We're the remnants, okay? So because of that, because we're at the bottom, they will only finance you if you have a large market, big traction, a lot of interest, good revenue. You've piloted, you've done a minimum viable product. You have a prototype that people are excited to buy. You have partners that are waiting for you to launch. That is what people will invest in you on. Because we now know that there's this cultural stereotype, then we have to act accordingly. Which means what? If you have an idea, great, but go and build first. Go and sell first before you come to ask for money. The second bit that I think also is very powerful is I recently had this conversation with another investor here, and he again said something very powerful. He said there were two groups that were invested in. One of the groups, okay, that was invested in had an average return of 60, or rather had an average return of almost like negative 60. So the money went in, but it didn't come out. Do you understand? So you invest, but like you don't get the fruits. The returns are not what they should be. Another one, but this one had a lot of innovation, a lot of crazy tech, a lot of exciting things, but the return was not reflective of that. It was minus 60. Another one had 20% stable return. Didn't grow as fast. Not very hyped businesses, very simple things, but stable and always repaid their debts. Who are these two groups? Or rather, what is common between these two groups? The first group was African men. The second group, African women. You would never think that African women are the best bet for investment. People don't know this. They're the best. They always repay their debts. They have 120% return over their male counterparts. they are likely going to run the most stable businesses. So they are actually Africa's best bet. But when you look at venture capital coming into Africa, I don't even think they get 5%. So again, cultural stereotypes.
Wow. See, this is a conversation, like I said, I'm enjoying this conversation. It's stakeholder engagement, right, on navigating this challenge. It's very, very, very important that we are aware of these things. So if you're preferring solution or you're looking to get access to these things, you are aware so that you're better prepared for, like I would say, like a shock absorber when you are in these meetings and in these rooms and you're like, okay, it's not that bad, because sometimes when people get this shock, these things, and it comes as a shock, they're like, oh, I'm not going to do this again. I'm not going into this business again. But no, it shouldn't be like that. Okay, so our next question is, in your opinion, what new approaches to be taken to enhance access to finance for business? What new approaches should be
Hmm.
taken?
In terms of new, I would say we probably need to have a lot more creation of instruments that work for Africa. So even where I sit right now, I don't quite believe that venture capital or private equity, as it is done in the West, in Silicon Valley, should be done in Africa in the same way. I don't believe that because you exit a business in Silicon Valley as an investor in, I don't know, 5 years, that now in Africa, you should have the same standard. Our markets are completely different. And when I say this, I mean we have we have immature markets. Okay. So even if you're a business owner or a startup, the market in Africa is small. And I don't mean small that we don't have the population. I mean small in the sense that the need, okay, for innovation, the demand for innovation and the absorption of innovation is small. So you could have a great application, great innovation, great product. But because Africa, we're not at a level where we can appreciate what you have built, we are a small market for you. So whoever is coming in has to be very patient with you, number one. Number two, a lot of African startups have insane valuations that are untrue. And we must sit down and accept they're not factual. And it comes back to because you saw that Stripe is valued at X, and now as a result, Flutterwave is now at Y. Even you're at Z for your fintech. You're lying. No, people just need to have very factual valuation. So I really fight with founders about their valuation a lot. So we need to have proper company valuations. And it has to be based on market comparables. Even if you're the first mover in your industry, there has to be a way to peg your valuation based on where you are and the country that you're in, and the fact that your industry will not grow at the same pace if you're doing it, I don't know, in Cote d'Ivoire or in Congo versus if you had picked up and done it in Singapore. Your growth is going to be completely different. And we need to accept that. And adoption is going to be slow. And we need to accept that. The final thing that I would also say here is we need to have a lot more previous entrepreneurs or serial founders influencing and advising government policy around investment and finance, structures, and also advising businesses. So, because me, Edith, I have started businesses in these countries and I have received different forms of capital in these countries. I now understand how it should work, right? From experience. There are other founders who have exited previous businesses, either successful or unsuccessful, but you've sold it and you've made your money. You are the ideal person to advise a new entrepreneur who hasn't raised capital. You entrepreneurs that have done Series A, Series B, Series C. You're the ideal one to send the elevator back down and advise the upcoming ones. But that's not what's happening right now. People raise capital and they keep quiet. They won't even tell you how they did it. They won't tell you which advisor helped them. They won't tell you how the deal was structured. It'll just be on LinkedIn. XYZ raises $10 million, and then the picture of the team. And you're like, how? How? I was with so-and-so the other day. They won't tell you. They won't tell you how they did it. So we need to have a lot more demystifying of this. And I think also, again, conversations like this, like what TAS is doing, is definitely a step in the right direction, and having a lot more of it to understand what has worked for different entrepreneurs, what hasn't worked for them. And then the final thing, we need to have us entrepreneurs financing each other's businesses. So if my business has done well and I have X amount of profit, why would you go to a bank and pay the bank 34% when you can come to me and pay me 20%? But also, people don't like to ask fellow entrepreneurs for capital, and they don't want to pay capital to that, pay interest to that entrepreneur. So you can pay interest to these loan sharks on your phone, but when you're borrowing money from your friend or family member, you want to do it for free, and you return the money after 12 months with a lot of haggling and no interest. Shame on you. It's the same concept. So as business owners, we then start to lend to each other if there was a structure on how to do so in an organized way, in a safe and interest-backed way. Yeah.
Thank you so much. Thank you. Our final question. Our final question is, what advice do you have for those struggling to raise finance? What advice do you have for them, for their business?
I would say, make sure you know what sort of options are available for you. That's number one. Number two, make sure you get the right money. I say money is good, but not all money is good money. So you need the right form of capital with the right terms. Number three, pay for the advice you need. When you're going to raise capital, the people that you need to speak to, okay, and that need to be in your corner, and that you need to pay for their time and for whatever help they're giving you. You need a lawyer, very good one. You need a financial advisor or a financial engineer to structure the deal for you. You need a personal advisor of sorts, okay? Because people will give you a lot of feedback or will give you a lot of suggestions, but especially if you don't understand finance, then you need to have somebody who does understand finance that can sit in your corner, where they're not in the deal per se, but they can advise you. Then, depending on if you have a physical thing that you're trying to build, you would have your cost consultant, your project manager, your development manager. There are roles when you're structuring a deal. The other thing I need you to remember, receiving debt is very different from when you're doing a merger and acquisition deal. It's very different from when you're doing venture capital deal, when you're doing private equity deal, when you're doing angel investing deal, when you're doing trade finance deal, and when you're just doing a normal bank transaction. Or when you're monetizing instruments, very different. So, and when you're doing a bond or an IPO. But the one role that you cannot miss is an investment banker, or somebody whose character traits mimic an investment banker. So for example, my character traits mimic an investment banker. I may not be in a KPMG or similar, but that's my background, right? So you can find people whose character traits mimic that, because then they understand from the legal standpoint, transaction standpoint, acquisition standpoint, all the different layers, but they sort of cut across. The last thing is you need to make sure that you have the documents that you need. Entrepreneurs, we can't be here sitting and you think you're going to raise capital because you have a pitch deck. Actually, shame on you. That's step one. There are like 11, 12 other steps from your KYC, anti-money laundering, sometimes feasibility studies, sometimes information memorandum or bond prospectus, sometimes company valuation, sometimes financial modeling, audits. It's by the time you have a full file, there's a deal we're doing in West Africa for private equity, and her file ended up being 160 documents. So when you're sitting pretty with your 20-page deck and you think somebody's going to give you capital, somebody will remove money that is supposed to do other things and give it to you. How? Even me, I can't give it to you. How? So having everything in order, I think that's like, just make sure you do the right thing. That's what I would say. Do the right thing. Pay the players and the people you need help with to do the right thing. Even if you come to task and you say, task, I need help with this business, blah, 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 whatever, pay for it so that you get the right document. And the options are there, the firms are there, the players are there. You don't have to go to KPMG because those guys are expensive. But I didn't say that. But you don't have to go on that level. There are other players in the middle that you can afford, that you can still get what you need. But be ready to go through the process. My final thing, sometimes it will take you 2 years to raise capital. Sometimes it will take you 1 year, but be patient. Sometimes it will take you 5 years. Be patient. Yeah.
Thank you so much. Like this is one of the things I always say. Task has been blessed with extraordinary partners. That's what I would just say. Because what is out there on social media is you have jingles like, in 3 months I got this grant. In 5 months, like, you guys start getting agitated that you are not assessing these things. And this is one of the things I love our partners for. And they'll just be like, be patient. And this is the same thing we always still preach to every African. Be patient. It's not this. It's not the same for everybody. And like she rightly said, if you need something, always reach out. You reach out. Oh, we need this. Write an email, send a DM, reach out to us in the communities. We have one. The thing is, we have partners with these things, but if you are not reaching out, so I'm like, okay, I think you are cool with it. You don't need this. Oh, we need to reach out to Arrow for Africa to do something. Oh, this is their website. We need this. Okay, she you can meet her for this, or you can meet this person for this, or there are different options. And the truth is, when you are coming from the the ecosystem of partnerships, it's easier for other people than just coming directly and just coming directly. You might get a discount. I'm not saying it's everywhere, but you might get a discount from coming from this person or this person. I've had an opportunity where somebody reached out to me and just wanted something, and I was like, oh, we have a partner that can do this, and the person gave render that service for free. I had to even go and meet the partner like, oh, you did charge the person? No. I didn't. I was like, oh wow. Simply because I'm like, okay, this person is coming from from this place. That's why. So you never know. Now I'm not saying that they will not um charge you for this services. Please learn to stop trying to get everything for free. Right. Stop trying to get everything for free, like she rightly said. And this is not a time for you not to want to pay people to do stuff, right? You need to learn how to want to pay. Stop expecting free stuff all the time. Yes, TAS might have its classes for free. TAS might do some certain things for free, but there are some things you would need to pay for. You need to learn how to pay for things. So thank you so much, ma'am. Thank you so much, Ara, for Africa for sponsoring this. And then for our entrepreneurs that you want to access finance, we have courses on our institute. We have pitching for funding and investors, where we brought someone to come and talk about pitching, but the documents you need before pitching, like she rightly said, places that you can get loans. We didn't talk about, or I said loans or access to finance. We didn't talk in depth about those conversations today. Like she said, it's broad, but you can always have that course on the website. We want to say a very, very, very big thank you on behalf of the executives. We want to say thank you. We want to just say thank you. I learned a lot. I learned a lot. I was just like, wow, wow, wow today. Because I was just like, okay. The one that took, like, that was it for me was I cannot just use the same lenders if I have made it like that in West Africa. I have to look at all the mathematics on that. There are some cultural differences that will not make me be able to access finance in some certain areas. And I was like, oh wow, we learn every day. So this conversation is open. It's going to be on a YouTube channel, so you could always go over it over and over and over again. Like I rightly said, as I open this conversation, just go to Area for Africa and check in. She mentioned this. Is this a particular course you need? Just check it. If you need us to reach out to help us, or are you having this course? Are you plan? We will do it for you. We are in the business of serving you, right? So just let us know what you need. Thank you so much, ma'am. I'm so grateful. I had fun. I enjoyed myself. Thank you so much. God bless you, ma'am.
Anytime, anytime. And thank you so much, everyone at TAS, for having me. I wish you guys nothing but God's best with all of your financing.
Thank you so much. So till next time, where we'll take on another challenge and have a stakeholder engagement on it. So it's bye from now, and thank you so much.